Plus, how social media impacts breaking news with CTV anchor Lisa LaFlamme. App Central, tonight, 8 Eastern, 5 Pacific, on BNN.
Let's head right down to the TSX and Diana Avigdor, VP, Portfolio Manager and Head of Trading at Barometer Capital. Diana, great to see you this morning. I know you wanted to take a look at the volatility index this morning, but I'm also curious your initial thinking with regards to Bank of Montreal, because it is setting up the earnings season for the Canadian banks. Your thoughts and thinking, what do your colleagues on the desk think?
Yeah, so I'll talk about a little bit about the sentiment around the BMO earnings. The sentiment is that the beat was of lower quality, that it was due to credit recovery. 20 to 25% of that beat was due to credit recovery, and that will not extend to the other banks. In other words, they don't have that much write-down and credit recovery to have. So the next bank earnings are going to give us a better indicator as to what the actual bank earnings are going to be. The expectations of the M&I acquisition, they have more branches in Chicago now than they have in Toronto. That acquisition is going very well for them. The Harris Bank has done very well as a result of the acquisition. So really, the strength has come from the U.S. and their indicators in Canada are not as clear. So the feeling is that we want to wait for the rest of the banks to report coming up in the next few days.
And just overall, is there a sense that people want to buy the banks right now, or are they stepping back or just holding off? Is there any pent-up interest in buying these banks?
You know, Francis, the feeling on the trading desk is it's very, very quiet. Volumes are very light. Block trading is low. There feels like a lack of interest. And almost a feeling of we want to see what's happening next, because we are at a crossroads in the market. A lot of stocks have gone up a lot. The markets have done extremely well in the last 2 months only. We're reaching levels with lots of catalysts coming forward. I think people are buying the dips very gingerly, but there isn't a very aggressive buying sentiment out there, as evidenced by the volumes as well. You see Toronto TSX volumes were at 75% yesterday, and Europe too, down about 21% this morning versus the 20-day moving averages. So despite this strength that we feel and all these catalysts coming up, there really isn't that much activity going on. It's just a little bit of a bid to the market, a little bit of a beta chase, given the rally that we've had so far.
And one thing that isn't rallying is the volatility index, and it's down 20% so far this year, but I think you suggest there are other signs in the market of fear, even though it's not showing up in the fear index itself.
Right. So I wanted to bring up an index that we're watching, and that's the Credit Suisse Fear Barometer. The VIX, which is what we watch for volatility and sentiment, is very, very low. And that lends people to believe that there is complacency in the market and generally tends to be bullish for the market. The Credit Suisse Fear Barometer is at a high right now if we would have been able to look at the chart. What it means is that the cost of buying protection for your portfolio, so the cost of a put, is 10 times higher than the equivalent of the cost of buying a call. Buying a call is bullish. Buying a put is protection, or bearish if it's not hedged against a bunch of stocks. So the fact that the protection is 10 times more expensive than going long tells you that somewhere, somehow internally, that fear, that anxiety is there, because people are bidding up the cost of protection for their portfolios at this level. Another data point that I'm watching for internal anxiety in the market is equity correlations. What they relate to is how stocks moved together in tandem, just as a risk asset versus individually as a business. So correlations, future correlations, and the correlations right now are at an all-time wide, or not all-time, but since 1992. That tells you that the expectations for future correlations are to rise. Correlations and volatility in the form of VIX tend to go together. So that implies that the expectations for future volatility, that it's going to be higher than where it is today.
So when you put all that together, I mentioned in a comment I made this morning that I'm confused because I'm looking at a lot of technicians. Some really smart guys are saying, watch out. Some really smart guys are saying this market's going to take off to the upside. The watch out guys, of course, are worried, as those indicators suggest maybe, that things are going to fall to the downside. Is everybody kind of confused out there? That's why we don't have these volumes? That's why we're sitting here trying to get through 13,000 and can't do it on the Dow?
Yeah, there's different factors at work, and some of it is kind of circular. When the volatility is low, ETF activity is low. That means that single stock activity would be lower, as if you don't buy ETFs, then dealers don't have to buy the particular underlying stocks. Then HFTs, the high frequency trading, goes down. Market structure has changed so much in the last 5 to 7 years that those type of things tend to be circular. But I just want to say one aspect. Market has been in a longer term uptrend, and we may correct. We don't have to, but the risks are there. And at Barometer, one of the basic tenets of our investment philosophy was we don't go against the market. We kind of go with the market. So in this confusion, we're sort of at a cusp, and yes, we can break up or break down. But what I can recommend to people is that shorting is not for the faint of heart here, but you should watch these internals. Buy stocks that are fundamentally very good and that their price action supports it. Yield is very important here. You look at RSP season flows, the yield market and the corporate and the high yield market and the dividend paying funds and stocks, those are the ones that are being demanded and supported, and they will give you a little bit of a cushion should the market falter a little bit. If the market breaks out, it's going to be a new high. But if it breaks down, it's going to look like a double top. We have a lot of you know, the LTRO you mentioned earlier. We have the China Manufacturing Index, which is on Wednesday night, which is a huge barometer for commodities on Wednesday night. And we have a geopolitical issue out of Iraq that everybody is watching. So there are risks out there and things that could move us either way. But the bottom line, when you don't know what to do, you want to have these fundamental yield-supporting stocks, and that is what we're doing.
All right, good advice. Thank you very much, Diana. Always a pleasure to talk with you.
Thank you very much.
Diana Avigdor, VP, Portfolio Manager and Head of Trading at Barometer Capital.
When we come back, we're going to take a look at some analysts are out there with buys and